Assalamu alaikum warahmatullahi wabarakatuh. Hello, let me introduce myself. My name is Rara Zajeng Pratawi. From Accounting 23A, with NPM 234120008, here I want to explain about value-added tax. Definition of value-added tax, VAT, is a tax imposed on the purchase of goods and services within the country. This tax is called an indirect tax because it is not paid directly by consumers to the government, but rather through sellers. VAT replaces the sales tax, which was considered less effective in meeting development needs. With the implementation of VAT, the government can increase national revenue, encourage export activities, and distribute the tax burden more fairly across society. Taxable goods and exemptions for taxable goods. 1. Taxable goods, BKP. Goods are tangible items that, by their nature or law, can be movable or immovable, and intangible goods. 2. Intangible taxable goods. The definition of intangible taxable goods is the use or the right to use copyrights in the fields of literature, art, or scientific works, design or model patents, plans, or trade secrets. 3. Exemptions for taxable goods, BKP. Goods resulting from mining or drilling taken directly from their source, basic necessities that are greatly needed by the general public. Tax rate. 1. Value-added tax is 10%, applied to a. the delivery of taxable goods within the customs area, b. the import of taxable goods, c. the delivery of taxable services within the customs area, d. the utilization of taxable services from outside the customs area within the customs area. 2. The value-added tax rate of 0% is applied to a. the export of tangible taxable goods, b. the export of intangible taxable goods, ANDC. The export of taxable services. Basis for VAT assessment, DPP. The VAT tax base is the amount of selling price, replacement, import value, export value, or other values used as the basis for calculating the tax owed. A. Selling price EB. Replacement C. Import valued. Export value E. Other value. Input tax and output tax. Input tax is the value-added tax that should have been paid by the taxable entrepreneur due to the acquisition of taxable goods and/or the acquisition of taxable services and/or the utilization of intangible taxable goods from outside the customs area or the utilization of taxable services from outside the customs area and/or the import of taxable goods. Output tax is the value-added tax that must be collected by the taxable entrepreneur who delivers taxable goods, provides taxable services, exports tangible taxable goods, exports intangible taxable goods, and/or exports taxable services. Thanks to watching. If there are mistake, I am so sorry, and I close. Wassalamu alaikum warahmatullahi wabarakatuh.